So, welcome back from the break. We were just looking at the advantages of absorption costing. And the third one is it is suitable way of pricing, since some firms' cost is higher than their variable cost. Once your fixed cost is higher than your variable cost, it makes it easy to price your item, because if you do without the fixed cost, it means you are going to underprice your units that have been produced. Now let's look at some key points under absorption costing. The full production costs are allocated to products. This includes absorbed fixed production. Under the marginal, we only consider just the variable items, but with the absorption, we include the fixed cost as part of the product's cost. Then the fixed cost is used in the valuation of stock. So from our illustration under marginal, we realize that the production cost under the marginal cost of sales was used to value the closing stock without our fixed overhead. So under absorption costing, we are going to use the fixed cost in the valuation of our closing stock. Now let's look at some trial questions. What is an absorption costing? So we just look at the definition and we can say that it's a technique used by management to ascertain the profit by considering both the variable and the fixed cost. So with absorption costing, both variable costs and fixed costs are charged to the product. Advantages of our absorption costing. We said it is easy to operate, and it also helps in ascertaining the price of a product by considering what's the fixed cost, because sometimes our fixed cost may be higher than the variable cost. Now let's look at the format difference from the marginal costing. The only difference is the same, but here we have included our fixed production overheads. The same thing, but this time, instead of saying marginal cost of sales, it is not only marginal items, which are otherwise mentioned as direct items or direct cost. So we can say less cost of sales because we have our fixed costs being included. So we have the direct material, direct labor, variable production overheads, and then the fixed production overheads. All sum up giving us our production cost. As compared to the marginal, the production cost was a summation of just the first three. Then we realize our closing stock. When we take our illustration on absorption costing, we know how to value our closing stock under the absorption method. And this time around, because fixed cost is included, when we less the cost of sales from our sales, what we get is not contribution, but what? Our gross profit. Then we less other operating expenses, which includes our selling expenses, distribution expenses, administration expenses, being it variable or fixed. And that will give us our net profit. So we take a question to look at how we can prepare a profit statement for a company. So the question will be on our screens for just some few seconds. Manufacturing company has the following information in its books for the year ended 31st December 2023. Sales has been given as 1,000 units at 150 cedis. Administration cost 5,000. Fixed factory overhead 75,000. Variable selling and distribution overhead given as 10,000. Direct labor cost is 30 per unit. Direct materials 30 per unit. Variable factory overheads is 10 per unit. And then the production unit is 1,250. So the units produced in total is 1,250, and out of it, only 1,000 units was sold. So we are going to base on this question to prepare a profit statement for Adepa Manufacturing Company. So don't forget to state the company and the type or the method you are using. So we have Adepa Limited, and we are calculating for the net profit using what the absorption approach. So the selling price has been given. At the same time, the unit sold has also been given. For us to ascertain our sales, it is the unit sold, which is the 1,000, multiplied by the selling price of 150. And that will give us a total sales of 150,000 as indicated on your screen. The next thing is to less our cost of sales. As compared to the marginal, we were to less our marginal cost of sales or variable cost of sales. But this time, we have cost of sales because fixed cost is included. So we list all our item that falls under that. We have direct material, and for the direct material, we want to know the total direct material cost incurred in producing the total units of 1,250. So we multiply the units produced, which is 1,250, by the unit price of 30 for the material, and that will give us a total material cost of 37,500. Then we have our direct labor, and with that we want to know the amount we spend on our labors for producing the total units of 1,250. So we multiply the total units produced by the unit price, which is also 30, and that will also give us 37,500, as you can see on your screens. So we move on to our fixed factory overheads and then our variable factory overheads. Now, our fixed factory overheads have been given as 75,000. So we are going to add that. And then our variable overheads, also with regards to the units produced, is 10 per unit. So we go back to our worksheet. We already know our sales, our direct factory overheads has been given as what? 75,000. And then the variable overheads, with regards to the total units produced of 1,250, rates per unit produced, which is 10 cedis, and that will give us a total variable cost of 12,500. We sum all these up to give us the production cost. So you can see that under absorption approach, both the fixed factory overheads and the variable overheads are part of the production cost. So we sum these up to give us the production cost of 162,500. Now, from our question, we have 1,250 units being produced, but only 1,000 of these units were sold, meaning there are some items left in our stores once again. So we need to value that unit by subtracting the units sold from the units produced. So we have our closing stock as 250. That is the difference between the units sold and then the units produced, which is the 250, divided by the units produced, which is 1,250 units. Then we multiply it by the units, the cost of production, which is 162,500. So to value our closing stock under the absorption, from our key points, we mentioned that fixed cost is used to value our closing stock. So it has been included in the production cost. So to value our closing stock under absorption, fixed cost is part. We have our closing stock of 250 divided by the units produced of 1,250, and then multiply by the production cost of 160,500, giving us a closing stock of 32,500. So we less the closing stock from our production cost, giving us the total cost of 60,000. We less that from the sales, and that will give us our gross profit. So we have our gross profit as 20,000 under the absorption approach. Under the marginal approach, when we less our marginal cost of sales, what we have is our contribution. So we don't have contribution under the absorption approach. We have rather gross profit. So we go back to our question again and look at all the other details left for us to treat. So we have some other expenses as administrative costs, and then variable selling and distribution overhead. So we add that to our worksheet. So we go back to our worksheet. We got to our gross profit. Now we have to less all other expenses from our gross profit, and that will give us our net profit. Unlike the marginal, we would have added any other variable cost before we less to ascertain our contribution. Don't forget that any other variable cost will be less from the sales to give us our contribution, because our contribution is equal to what? Our sales less all variable costs. But with the absorption expenses, because we have already treated the factory overhead as part of the production cost. So in our question, we've been given cost of 5,000 cedis, and then variable selling and distribution overheads of 10,000, giving us a total of 15,000. So we less the total 15,000 from the gross profit of 20,000, and that will give us the net profit of 5,000 cedis. I hope this is very easy to calculate. So with a little understanding we have gained, both under marginal and then absorption costing, we will look at our question for the day. Our question for the day will be on the screens, and I expect all my business gurus to be able to solve. Then you can phone in to give us the answers, and I promise you have some awards awaiting for you once you have your answers correct. The phone lines will be on your screens, and you'll be able to call in and then give your answers. When you call, you should be able to tell us the sales, the contribution, the closing stock, and then the net profit. That is under marginal. And then under absorption, you should be able to give us the production cost, the closing stock, the gross profit, and then the net profit. So the phone lines will be on the screens. We have our phone lines at 030 22 11 705, or we have 030 22 11 706. So you can call on any of these two lines and then give us. It will be on your screens. I hope we are all done solving our question, and as I mentioned earlier, we have our phone lines open. So if you have your answers ready, you can phone in and then give your answers, and I promise you we have an award for all those that will call with the correct answers. Our requirement was for us to calculate the unit contribution and the marginal costing, and then the net profit and the absorption costing. So if you are ready and you have your answers, you can phone in. So I'll go through the numbers again. We have 0302 211 705 or 706. So you can just replace the last three digits, either 705 or 706. Hello, Felicia.
Hello.
Good evening, and you are welcome to Joy Learning.
Hello.
Can I know where you're calling from?
I'm calling from security.
Come again. Can you just go a bit away from your television set so that we can hear you?
Yes, please. I'm calling from security.
Your unit contribution under the marginal costing approach. Are you there?
Hello.
Yeah. Can you please step aside from your television set so that we can hear you? Because we are getting feedback.
Please, I can't hear you.
Because you are closer to the TV. Either you mute the TV or you go a bit away from it. Do we have more callers? All right, so we will be going through our question of the day. So A is asking us to calculate for the unit contribution under the marginal costing approach. So we have our selling price, which has been given as 360 per our question. Then we less all marginal costs. Don't forget that to ascertain our contribution, we have to less marginal costs from our selling price or sales. And then our marginal cost includes the direct material, which was given as 80. And then the direct labor was also given as 25. Then we have our production overheads, that is the variable aspect, was also given as 10. So we add our total marginal cost, that is the direct material, the direct labor, and then the production variable overheads. That will give us a total of 75. So to ascertain our contribution, we less our total marginal cost, which is the 75 from the sales of 360, and that will give us the contribution of 105. Then we look at the B aspects, where we are also supposed to calculate for our profit under the absorption costing approach. So this time around, we are going to prepare our profit statement. So we'll be using all the details in the question. We know the units produced as 5,000, and out of that, only 4,840 were sold. And our selling price has also been given as 360 cedis. As you can see, I'm trying to bring all the variables out. Then we have all items stated, as in the materials, the elements that make up the cost, the material, the labor, the overheads, and the administrative and selling cost. So let's look at how we can prepare the profit statement. We have our sales. Our sales is equal to the units sold by the selling price. So out of the 5,000 units produced, we have 4,840 being sold. So we multiply the 360 cedis by the 4,840 units, and that will give us sales of 1,742,400. Then we less our cost of sales. So this is not under marginal, this is under absorption. So we are not lessing our marginal cost of sales, but we are lessing what cost of sales, because fixed cost is included. So we have our direct material, which is 80 per unit. So if you want to know the total direct material cost, is the 80 multiplied by the 5,000 units, and that will give us 400,000. Then with our direct labor, the cost per hour has also been given as 60. So we multiply the 60 by the 5,000. And that will give us 300,000. Then our variable cost, which is also under the labor. So we have the direct labor, we have the fixed labor cost, and then the variable labor cost. So the variable labor is 50. And that will give us 250,000. Then we move on to our production overheads. We can decide not to separate it because under absorption, we are looking at both fixed and variable. So if they just give you a production overheads, you can just go straight and put the total cost there. But if under marginal, it means you have to look for the variable aspect of the production overheads and then treat it under marginal approach. So we have our production overheads, the fixed cost, 5,000 by 30. That is, the production unit was 5,000 and the fixed cost per unit is 30. So we multiply that to give us 150. And then the variable cost is also 5,000 for the production multiplied by the per unit of 20, and that will give us 100,000. We move on to ascertain our production cost, which is addition of all the costs incurred from material to our variable cost of production, and that will give us a production cost of 1,200,000. Now, we produce 5,000 units, but only 4,840 units were sold. So for us to value our closing stock, we need to know the difference between the units sold and then the units produced. So we have our closing balance as 160. That is the difference between the units sold and then the units produced of 5,000. Divided by the units produced, which is our 5,000, then we multiply it by our cost of production, or our production cost of 1,200,000, to give us the closing value, which is 38,400. We less that from our production cost to give us the total cost of sales of 1,161,600. So we are going to subtract this total from our sales to give us our gross profits. So we go back to our question and then we can continue with our calculation. We ended at our closing stock being 38,400 and then giving us the total cost of production as 1,161,600. We less this total from our sales to give us our gross profit of 580,800 cedis. Now we can add all other operating expenses, being it fixed or variable. So we have administrative costs being given as 50% of our cost, which will give us 275,000. And then the selling and distribution overheads was also given as 1/10 of our sales. So we are going to find 1% of that. And that is 1/10 by 1,742,400. And that will give us selling and distribution cost of 174,240. We sum that up to give us 449,240. Then we subtract that from our gross profit to attain our net profit of 131,560. So those of you who tried your hands on our question for the day, you should have the same answer as I have here. You should be able to give us a production cost under the absorption as 1,200,000, a closing stock of 38,400, a gross profit of 580,800, and finally the net profit itself as 131,560 cedis. All too soon, we come to the end of our lesson for the day. I hope you have been able to learn something and you'll be able to practice more questions to help you with your preparation towards your examination. I am Madam Judith and I am your question facilitator. Enjoy the rest of your evening.